Welcome to Forex Mechanics. In this video, we're going to be discussing about currency strength and weakness and whether currency strength and weakness is important to consider before you place a trade or before you even think of creating your own strategy. But before we really get into it, it's very important that you read the disclaimer. Please understand that it's a trading business. Whether you're in stocks or forex, it doesn't really matter. Trading business is about risk, and I highly recommend that you go through the disclaimer before you even start watching this video. So, like I said, in this video we're going to be discussing, is currency strength and weakness really important? Now, for most of you who are fairly new to Forex, and if this is your first time really trying to trade Forex, then good that you're watching this video, because it's very important that you understand this concept before you even start trading or before you even think of creating your own strategy. Of course, when you talk about Forex strategies, you will have millions of strategies which are available online. You can use any one of them. But what really matters is whether Forex strength and weakness, whether the currency strength and weakness is really important or not. So when we talk about currency strength and weakness, or when we talk in general about Forex market, we talk about the 8 major currencies, which is the euro, the pound, Aussie, New Zealand, US dollar, Canadian, Swiss franc, and the yen. So basically these are the 8 currencies which make up the majority of the market that we have in the Forex trading business. And what we have generally seen is that when you talk to traders, you will see a lot of them talking about some important pairs like the euro dollar or the pound dollar, or maybe the dollar Swiss franc. So you will see traders talking about a few pairs. Especially you will see a lot of traders keep talking about euro dollar, so which means they're simply saying that I'm trading the euro against the US dollar. Now this is where things get a little haywire, I would say, because when we talk about currency, when we talk about Forex market, and if you look at these 8 major currencies, you get total of 28 currency pairs, right? And what is important for you to understand is, and especially if you're a new trader, please get this straight, because this will really help you when you eventually start trading live and start making your own strategy. As currency traders, please understand, as currency traders, you are not trading currency pairs. Even though when you look at your trading platforms, you would see pairs like euro dollar, dollar Swiss franc, euro yen, US dollar, Canadian dollar. Of course, you're trading them as pairs, but please understand, as a currency trader, you are trading currencies. So when we say currencies, we are talking about individual currencies. Now, of course, when we proceed further, you will understand why I'm actually stressing so much on that. As currency traders, we are trading individual currencies and not pairs. So like I said, we have 8 major currencies, and it can be paired with one another, and we have 28 currency pairs. Now when we talk about the Forex market, you will see that these 28 currency pairs really have most of the volume. This is what really moves the market. Of course, when we talk about the majors, which are the dollar pairs, really, when I say the dollar pairs, I'm talking about the dollar, the euro dollar, pound dollar, Aussie dollar, New Zealand dollar, and so on. These are the pairs which have maximum volume. But it would be correct to say that these 28 currency pairs is what really makes up the major chunk of volumes in the Forex market. So as a currency trader, we all know that when we trade Forex, we have pairs. We have 28 pairs, which are there available to trade, and you can obviously look for trading setups on these 28 pairs. But as a currency trader, even though you're trading physically, you're trading a currency pair, but what is important is that you should understand that you are basically looking at an individual currency, an individual economy, an individual country, I would say. So when we talk about trading a currency pair, this is where it becomes really important to understand which currency is strong and which currency is weak. Please understand that when we are trading Forex, okay, it all comes down to analyzing which currency is really strong and which currency is really weak. And now when I say strong and weak, I simply mean that which is that one currency where, where there's major buying happening, people are really buying. So let's say there is some very good news that has come up in New Zealand, and there is everything for the country looks very positive, and you see that people are busy buying the kiwi. Okay, so if the New Zealand dollar is if the New Zealand currency is getting strong, and let's say if people are selling the pound, right? So we know that pound New Zealand is a good currency to trade. Now, when we go further in the video, I will give you certain examples, and that will really make it easy for you to understand that why am I really stressing so much on currency strength and weakness. And you will eventually realize that irrespective of whatever strategy you're trading, this one little addition is going to help you irrespective of whatever strategy you're trading, right? So let's say if you want to trade the euro dollar, right? So let's say you've seen a chart for euro dollar, and you want to trade it. So you're saying you feel, according to your strategy, euro dollar is a good buy, and you want to buy this currency pair. And very soon we will be looking at charts and currency pairs, and then you will understand it better. But let's take an example that you want to trade the euro dollar. Right now, when you say you want to trade the euro dollar, what is important is that, let's say you want to sell the euro dollar. So when we say euro dollar sell, it basically means that the euro is dropping, or the euro is getting weak, and the dollar is getting strong. So here I've given a little example. Let's say if you want to sell the euro dollar. So here, if you look at this side of the presentation, you can see if you are selling. So let's take an example that you want to sell the euro dollar. Then what really happens? You can see all the dollar pairs. So wherever dollar, you can see dollar CAD is going up, dollar Swiss franc is going up, dollar yen is going up, and you can see all other pairs are going down. So when you see dollar towards the left, so dollar here is your base currency, right? So you can see dollar is on the left of the pair, which means the dollar is rising. So you can see dollar is going up, and all other pairs are falling against the US dollar. So you can see the euro dollar is dropping, the Aussie dollar is dropping. So you can see overall the dollar is strong. All right. So what this means is that if the US dollar is strong, then it would be a very good bet to buy the US dollar. But then you would be thinking that if I want to really buy the US dollar, then what should I trade it against? Right now, of course, dollar is strong, it's going up, but then what do you trade it against? And let's say to the flip side, you can see on the other side that the euro is weakening, which means when you look at all the euro pairs, you can see that all euro pairs are weakening, which means that the dollar as a currency is strong, euro as a currency is weak. So which means the best currency pair to be really trading at this point is the euro dollar. So what is the best thing to do? You take the euro dollar pair and you sell the euro dollar. Of course, you just don't simply pull up the chart and pull up the currency pair and sell it. There are many other things that go into it in terms of when to sell, or depends on how do you time your entries. It depends on what strategy you're using. It depends on what your entry strategy is. But then what is important is that before you even start trading, what is important is that which currency pair you should be trading. Now, how do you really find that out? There are various tools available online which help you determine strength and weakness. We personally use our own currency strength and weakness tool, which is available for our members, but then we will discuss that in some other video. So here you can see if you want to buy the euro dollar or if you want to sell the euro dollar. The most important thing is that these individual currencies should be moving against each other, right? So this is the most important thing, that you should be aware that whichever pair you're trading, the currency, the individual currency that is involved, should be moving against each other. So what I'm going to do now is I'm going to take some examples and I will show it to you on charts. It becomes easier for you to understand. So what we're going to do now is we're going to look at individual currencies. So what you will have to do is, if you want access to individual currency charts or individual currency index charts, because these charts are really worth it, because and the best part is that these charts are available for free. You can simply go to lightforex.com. Now Lightforex is a broker, it's a forex broker, and you can download MetaTrader 4. You can download MetaTrader 4 from their website. You can simply go to www.lightforex.com. And the best part about this broker is that they give you access to index data. So when I say index, I basically mean here, you know, when you look at when you look to the left of your screen, when you install Lightforex MetaTrader, you go to their website, you download the you download the software, and when you look to the left, on the left of the indicator of the software, you will see under the market watch window, you will see all the currency indexes. Now here what you see is USD LFX. Now you can ignore the LFX bit here, because it simply means that this is the dollar chart, this is the euro chart, this is the pound, this is the yen, this is the Swiss, this is the CAD, this is the Aussie, this is the New Zealand. Okay, now let's take an example of, let's say we have some charts open here. Let's say if we are looking at individual currencies. Right now here is the dollar chart. Okay, and when you say dollar LFX and I'm on the 1 hour time frame, it basically means that we are looking at the dollar index. So when I say dollar index, it basically means this chart is an average of all the dollar pairs, and based on the average it is created a chart. And this is one reason why I really like this broker, because they give you access to this individual index charts, and it makes your life easy to really analyze indexes independently. You know, rather than looking at 28 pairs, you can look at 8 currency charts and immediately realize which one is going up, which one is going down. You can pair them accordingly, and you can look for trading setups in that pair. So let's say if the dollar is going up, you can see it's quite visible here that the dollar is going up. These are nothing but some simple these are some moving averages that we have applied on the chart, just for purpose of this video, because we just want you to have a clear visual idea of what's happening here. You can see that the dollar is basically rising. All we are looking at is the dollar chart, which is the dollar index, which is the average of the dollar pairs. Basis that, they have prepared a chart, and basis this chart, you can see that the dollar is going up. Now if the dollar is going up, let's see what is the euro doing. Right, so you can see the dollar is up and the euro is also going up currently. I mean, we're looking at what is happening, the most recent price action. So again, you can see the dollar has already been going up and the euro has started to go up. And let's look at the euro dollar chart. Do you see what is happening right now? The dollar is going up, which means the dollar is gaining in value. Euro has also started to gain in value. So if you look at, you're looking at it somewhere from say 21st of December. So you can see that this is the 21st of December, and from here on euro started to gain momentum. Now understand, what did we talk about currency strength and weakness? We said we want one currency to gain and we want the other currency to weaken. If both the currencies are going to gain or if both the currencies are going to weaken, you cannot make money in forex. As simple as that. If both currencies are going up or if both currencies are going down, that is the worst pair that you can be trading. So let's see what is happening in euro dollar. Now if you take a look exactly from this point here, this is when euro dollar, you saw these moving averages cross and it started gaining value. So somewhere from the 21st or the 22nd of December, you can see euro was going up and dollar was already on an uptrend. What happened to the euro dollar from the 22nd or 21st of December? Do you see? Nothing. Absolutely nothing. This currency pair is doing nothing. It has just gone flat. Now, but do you see something interesting here? If I again go back to the euro dollar chart, and you can see that, let's say we are looking at, let's go back here. Look at this, right? If you look at 14th December, so here you can see there was a sudden spike in price, and price started to rally, and the dollar started to go up. And at the same time here, you could see that the euro had already weakened, so you can see the euro was dropping. And when you look at this point here, you can see because of the dollar move, euro dollar had started to drop. So I'm going to give you some more examples in terms of which was the best time to really trade. So let's take a look at this period here. You can see this period where it was a nice clean downtrend, which happened sometime back in November. So you can see somewhere in the month of November, you could see euro dollar had a clear downtrend. So let's go back to the individual charts for euro. Here's the euro individual chart, and let's go back to the dollar individual chart. You can see it's very clear. There we go. Dollar start early November. This is around the 9th or 10th of November. Please understand, guys, we are not really looking at precise entries or exits in this video. We are just looking at the overall concept of strength and weakness only by using these moving averages and trying to understand what happens when you have two individual currencies moving against each other strongly. Only then can you get some good trending situations, or only then do you get good situations to make some pips in the market. Okay, so here you can see dollar 9th November. You can see this was a nice little uptrend, and this went on for quite some time. And similarly, during that phase, you could see that the euro had started to drop, and then it continued to drop. So almost from 9th till all the way up till the 18th. So let's say if we have to take this day here, 9th all the way till the 18th, dollar was rising, and again from 9th of November till all the way till 18th of November, euro was dropping. What happened to the euro dollar from that time? You could see a clear downtrend on the euro dollar, which means we are not really saying that you need to get an entry here, and you need to be very precise with your entries. We are saying from the 9th of November till the 18th of November, you would have had some good chances to sell this pair, because you could see it was clearly downtrending. It was in a downtrend, and that's what made it easy for you. That's what made it easy trading, because that there are two pairs which are moving against each other, and it becomes relatively easy to trade. So now again, what we're going to do is, we know that the dollar has been going up. Okay, let's take the most recent example. So as of now, we know that the dollar has been trending. So it started trending somewhere around the 14th or 15th of December. Let's look at what is the best pair to really trade with the dollar. Let's say New Zealand. Here, do you see this is the dollar? This is the dollar index. As usual, it was, you could see 14th December this started. There was this big up move. I'm not saying that we would be catching this up move, but as I said in this video, we're just trying to understand the concept of strength and weakness. You can see dollar is going up. So this is the dollar index where prices are going up. Similarly, you can see the date here. This is around 14th or 15th of December. And around 14th or 15th of December, you could see the New Zealand dollar started to weaken, and then eventually there was this nice downtrend on the New Zealand dollar, right? And I will tell you what would happen in a typical scenario like this. What happens is, you can see dollar going up, New Zealand going down, and what's going to happen is that you will see that the New Zealand, so this could be a little exercise that you could do. You could open your chart once you have any MetaTrader broker, any broker that you're currently using. Look at what happened to New Zealand dollar that is the New Zealand and the US dollar, so the NSD USD, the Kiwi basically. Look at what happened from the 15th of December right until today. Okay, all you have to do is open the New Zealand dollar chart again. So this is a little exercise that you could do. Open the New Zealand dollar chart starting 14th to 15th of December and see what has happened to that pair from that day till now. And I'm telling you, you would have seen a very clear downtrend or multiple sell opportunities on the New Zealand dollar US dollar. All right, so if we have to look at I have some other charts open here, so let's take a look at the Euro AUD. Okay, so you have Euro AUD, nice uptrend on the Euro AUD. Again, we are looking at the 1 hour, but looking at this uptrend, let's see what is really moving this pair. That is, it's quite clear. In fact, you can see this here. There you go. This is the Euro Aussie. This is the Euro Aussie, another example we're looking at. From 16th of December, you could see that this price has started to rise. So are we saying that, you should have, you would have got an entry right about here when the move started? Not really. Like I said, in this video, we are only looking at strength and weakness. We're only trying to analyze what happens when two individual currencies start moving against each other. Only then do you get trading opportunities. This is what we are trying to make you understand in this video. So if you were looking at the Euro Aussie starting 19th of December, you would have had a good chance to make some entries in the upward direction. So basically, if you were buying the Euro Aussie in the last few days or in the last 2 weeks of December, the last week of December, you would have had a good chance of making some good profit as long as you were buying this currency pair. Why? Because the Aussie dollar starting, so you can see here, you saw this moving averages, really breaking out and prices started to drop rapidly. So somewhere on the 16th December onwards, price started to drop, right? And you saw Euro started to change its direction starting the 21st of December. So what happened to the Euro dollar before that? You can see that. Here's the 21st of December. What happens after that? Price goes up straight 280 pips. So you can see here, this move has been triggered. You can see this move is triggered simply because Aussie has been busy dropping. People have been selling the Aussie, and Euro followed much later, and people started buying, or this currency started to move up. When this currency started to move up, starting 21st of December, when this currency started to move up, Aussie was already on a weak trend. So when you have one currency which is going down and you have another currency which is going up, that makes a good market condition, or it makes a perfect trending situation for you to really get into the trade and make some profit. So now when we say when you look at this currency strength and weakness, you will say, oh, it's really that simple. I mean, you just look at you just look at individual currency indexes and see which one is dropping and which one is going up, which one is going down, and you simply pair it and then make profit. Well, this is the basic. This is how the market moves. Okay, this is how the market moves, and it is very important that you understand that if one currency is going up and if the other currency is going down, then look for trading opportunities basis whatever strategy you are using. Look for trading opportunities on those pairs, because your strategy will work best irrespective of whatever strategy you're using right now. Your strategy is going to give you much better results when you are trading in such conditions, when you're trading in such a market condition where both currencies are moving against each other. So like I said, do another little exercise. You could do this. Here you can see dollar is going up and the Swiss franc is going up, right? So you can see dollar going up, Swiss franc going up. Try opening the euro dollar, try opening the dollar CHF chart. So again, we are looking at 14 December onwards, dollar started to rise, and the CHF also started to rise from 16th or the 19th of December. Open the dollar CHF chart, which is the dollar Swiss franc. Open the dollar Swiss franc chart on your trading platform and see what has happened to this pair from maybe 16th or 17th of December. And you will figure out on your own that it would be practically impossible for you to even trade that market, because you have two currencies which are moving in the same direction. If both currencies are going up or both currencies are going down, you cannot make a profit, because the market conditions, irrespective of what time frame you're trading at that point, the market conditions are not correct for you to be trading, because your market is basically not doing anything. There is a lot of congestion. There's a lot of confusion, because dollar is going up, Swiss franc is going up, and the basic rule is, and just to keep it very simple, and what we want to do is, we don't want to complicate the videos too much. We want to keep it really simple. Understand that the basic rule of trading forex is, you need to be in a position to understand that you need to first, the first thing you do is you look at all the 8 currency pairs, you look at the charts, you understand which currencies are gaining in value, which currencies are decreasing in value, and then you look at which is the best pair to really trade. You try to this is what we've done in school, where you match things. This is what we used to do in school when we had some exercise in school, and you had to match the best pair. This is the same thing. If dollar is going up and the euro is going down, then yes, trade the euro dollar. If the dollar is going up, the euro is also going up, then please don't trade that pair. Look for something else. There will be better opportunities. You have 28 currency pairs that you can trade, and you will see every week there will be some currency pairs which will always there are some currency indexes which will start moving against each other. You will see that market conditions keep changing, and the best thing you could do is to find the best trading condition to trade your strategy. If the market condition for that specific pair that you're looking at, if it is not correct, then it is purely a waste of time and money, because even if you go and trade that pair, you won't really make money. For example, imagine if you were trading euro dollar from in the last 3 days. If you are a day trader and you're trying to trade in this market from here in the last 2 or 3 days, you cannot make money in this market, because there is absolutely nothing happening. It is flat. Why is it flat? Because both currencies, as you can clearly see, are in an uptrend, and the rule is, you want the currencies to move against each other. Now, this is one topic which I can really talk about the whole day, because I absolutely admire this topic, and I know that this is the most important topic if you really want to start forex trading. And please don't ignore currency strength and weakness. We of course, when we talk about trading currency pairs, there are many different tools available online which make your life easier. They tell you which is the best currency pair to really look for trading setups, basis strength and weakness. Maybe in the coming videos we will show you the in-house tool that we use, which makes it very easy for us to analyze which is the best currency pair to pick, or which is the best currency pair to really focus on today to make some profit, because it's easier that way. We don't want to really focus on 28 currency pairs every day. If there is a little tool which can tell you which currency pair to focus on immediately, just by looking at a screen, if you can say which currency pair to look at, I think that's the best thing that you could get, because it cuts down on your time, it saves time, and it becomes much more easier for you to trade. It becomes more easy. So in the next video I will be discussing a little bit more about currency strength and weakness, but for now we're going to leave it here. The first thing that you could do is you could go to lightforex.com, download their MT4, and you can go through the 8 currency indexes that they provide. It is really helpful. You can do it as an exercise. Simply download the free MetaTrader software they provide, and just by yourself you can just look at the 8 currency indexes, and you will automatically see how trading conditions change when 2 currencies start moving against each other. Okay, you can do it as an exercise. Download the software and try it yourself. It will really help you, especially if you're a beginner trader and if you have just started to create your own strategy. I highly recommend that you apply this little strength and weakness concept to your existing strategy, and trust me, you will see a difference in your results from the day you apply it. I'll see you in the next video. Thank you.